Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hello everybody, I'm Bill Dodd and thanks for joining us today on Market Journal. We've got a great show in store for you this week, so let's see what's happening in the agricultural industry this week. And kicking things off today, we'd like to share some information on an upcoming event that you might be keen to attend. The University of Nebraska-Lincoln's Center for Agricultural Profitability and Nebraska Extension will be holding an educational workshop that deals with family farm and ranch succession titled Returning to the Farm. This two-day workshop is designed to assist agricultural families who are planning transitions with at least 2 generations on the farm. Returning to the farm will help facilitate discussions for those generations to work through the multitude of business arrangements that will eventually go into making sure the operation is viable for generations to come.
And so we need to work on what are the goals, what are the visions, what are the values, what are the goals. In other words, across generations, do we have the same vision for that operation? Because if we don't, it's kind of silly to bring the next generation back. I mean, we also get that make sure that we get in place that idea that the older generation cannot just continue to remain completely in control. For us old people, it's about control. And so we don't want to give control. All we've done is think about what we're going to plant next year and what bull we're going to use on our cows next year, those kind of things. And it's about how we're going to make sure we succeed as a business. And so let's put together make sure we have strategies to put that together. All those things are just key. So after the vision and the goals and those kind of things and the communication, then we also want to look at the financial picture. Do we have enough assets, generating assets? Do you have enough acres to support a second family? Do you have enough of a livestock operation to support that second family? What's put in place there to make sure that both families can be happy? Because you have an older generation that may want money for their retirement, whatever that looks like. If they choose to retire, maybe they want to start going on trips or step away from a little bit. And then you have a younger generation that's going to need capital to expand and grow that operation as necessary. And then after we get done with those things, we want to look at some case studies and get them to actually start working on their own plan. How are they going to put it all together?
Beyond the two-day in-person event, there will also be 2 follow-up meetings that will take place in January and February, as well as a dedicated website that will host a number of informative videos and educational materials.
But the one virtual session right after in January that follows up with this is going to cover what business structures do we need in place to make sure we have that next generation succeed properly. And what I'm talking about is long-term rental agreements or long-term purchase agreements or first right of refusal agreements or any of those business structures to make sure that we kind of keep that next generation of the that next generation farm family successful, so that we don't end up with a situation where the mom and dad pass away and the farm has to be sold to be divided amongst all the kids in the family. We have to put it together so that the succeeding farmer gets to farm or the succeeding rancher gets to ranch. So that's going to be handled in January. And then the last session in February is going to talk about the legal side of that. What estate plans what do we put into our wills? What do we put into our trusts? How do we run an LLC? What are those structures, legal structures we can use? And we'll have a lawyer on for that can talk with us about how we put those together in a way that really makes sense for that operation from a legal standpoint.
The 2-day live workshop will be held at the Ramada Inn and Conference Center at 265 33rd Avenue in Columbus, Nebraska. There is a $50 per person registration fee, which covers 2 meals, all class materials, and the 2 virtual follow-up meetings. However, registration does not include reservations at the hotel. If you have questions or concerns, you're encouraged to reach out to Allan Vyhnalek via phone or email at 402-472-1771 or avyhnalek@unl.edu. Registration is now open at cap.unl.edu/RTF21. We've also taken the liberty of providing a link with more information on registration on the Market Journal website. Moving on to markets now, and the November 15th crop progress report showed corn harvest at 91% complete. That is 7% progress week over week and 3% behind the same week last year, but 5% ahead of the 5-year average. Meanwhile, soybean harvest is now 92% complete. That's 3% behind the same time this year and 1% below the 5-year average. I was joined earlier this week by Lakefront Futures and Options Market Strategist Darrin Fessler to discuss those numbers and more.
The progress is going pretty smoothly here now that we got past some of these rains. Here things are starting to dry out just a little bit in certain areas of the state, but really it was a pretty smooth harvest really for a lot of people. Yes, we went through some hiccups. We always do, but one of the messages that I continue to hear from clients the entire harvest was how good these yields are. And it has been very, very consistent. Usually if we don't have a good crop, it's kind of up and down. And there's only a few areas of the country that really kept saying that. Now it's kind of that north central Iowa. They kept saying, boy, it's a lot of variability. But if I speak to producers, especially across Nebraska, I know there's some issues out there, especially if you just go over the county line into Seward. That eastern part of Seward really suffered, but where it was good, it was really good. Nebraska, there was a lot of guys out there seeing record corn, record bean yields, and I can say that for a lot of people across the country as well.
And Darrin, we saw grains ending Tuesday on a low note with corn and soybean futures sliding a bit, while we see global demand for U.S. products showing signs of improvement. However, expected exports are still down from this time last year. Can I get your 2 cents on these developments?
Yeah, if you look at the ethanol swaps, and they're probably a better indicator than the straight out ethanol price here. You can definitely see why ethanol margins are very, very strong. We're going to have this strong base, this strong demand side of thing from domestic perspective to me, at least till the year end. But where the exports are relatively slow, especially on the corn and the beans relative year over year, we need those to be much stronger, especially the beans. Now we've seen some sales to China, Mexico stepping in here, buying some corn as well, but we're going to need those to continue to pick up here because Brazil planted early, and that's really the big threat here. Brazil planted early. Now, if this crop remains as the conditions are right now, very, very good, a lot of the people I talk to in Brazil and in South America, they're going to have some crops ready to harvest by the year end that's ready for market. Now, ready for market and ready to ship might be two different things, but they're going to have crops available. So that's going to put a little bit of pressure on. So this October, November, December timeframe, we should be moving bushels. We should be moving corn. We should be moving beans, in which we are. We're just not doing it at the pace we needed to make up for some lost time with the whole Hurricane Ida, I believe, on the New Orleans Gulf. So we lost a good 3-4 weeks of shipments there. We just got to catch back up. So right now, Brazil's looking pretty good. Does China start to cancel? Do they actually commit to these sales, and do they take delivery? I think that's another big question.
And of course, with Thanksgiving right around the corner, global food prices have been noticeably on the rise and are expected to stay elevated through 2022. What are the biggest obstacles that we need to clear in order to overcome this type of inflation?
Well, you watch the dollar. The dollar's been on a really good tear here. It's been on a nice upward channel here since basically that May-June timeframe. And I've been telling subscribers and clients here that if the dollar remains strong here, it's going to continue to put a lot of pressure on the Fed to raise those rates. And not just the Fed, but central banks around the world are fighting this. You take a look at some of the inflation risk that we've seen in Germany, 10, 15%. Now, inflation has hit, South America as well, some of our biggest bean competitors. What has Brazil done? They have raised rates 300 basis points, over the near term here to try to fight this inflation. I think it's going to be a wave here where central banks their hands are going to be forced to raise some rates here. These rates can't stay at these levels for very much longer, and printing more money is definitely not the situation here that we need to go down. So we got to watch the dollar. Is that going to be an indication of what rates do? And if rates do go higher, how does that affect the exports, and how does that impact the Chinese imports? Do they come more from Brazil? Do they come more from the U.S.? Again, we know that Chinese want the Brazilian beans, so I think it could put a little bit of pressure on our exports.
And Darrin, before we wrap things up, do you have any marketing or risk management advice that you'd care to impart on our viewers?
Yeah, right now on old crop corn, we're getting a really nice rally here on both corn and beans here. Reward these rallies here. I mean, we're rallying over $1 here in January beans in the front of a recent crop or a WASI report that we basically showed 20 million bushel increase in carryout, where I think that could be going higher in future reports here. It's a little bit of shock to see that the yield did not increase. I think that's the reason why it really set the tone here over the last week. But reward this rally. Rallies are meant to be sold here. Get some protection on for this new crop 22 corn. Even though that we do have a higher inputs here, I think some of those higher inputs, we need to continue to watch those margins, lock it in here. But $5 cash corn anymore does not look near as pretty as it did just even a few years ago. And these beans, if Brazil has a good crop here, we're going to have to rely on that demand store to keep these prices elevated. So where they are right now, a year out from next harvest, boy, these are really, really attractive prices for right now. Granted, so keep some protection in place here and reward these as we get them and as they come here. Because if we don't have any issues with Brazil, who knows where prices could be next year at this time when it comes to those November beans.
Moving over to the livestock sector, from options on retaining feeder cattle to the Cattle Price Discovery and Transparency Act, there was a lot to review this week. We were joined by the University of Nebraska-Lincoln's own Elliott Dennis on Tuesday to get his thoughts on the latest developments in the cattle markets.
Yeah, so this year is kind of an interesting year for producers who are thinking about retaining feeder cattle into January or even to March, April. And the primary reason is because of elevated feed prices. Normally we'd consider retaining feeder cattle, we have extra hay laying around, or we have some maybe corn stalks we have access to, and so we can put on the weight. But this year we need to be extra careful when we start to make those decisions because feed prices are so high. And so what we really want to do is if we have hay, we need to be testing that hay to ensure that we have good body score conditions going into the future. And also understand that we need to have a pretty good expectation of what price is going to be in January, because we can be putting in pretty expensive feed, and if we're not going to be getting that benefit back in the terms of really aggregate higher prices for the animals, then we could be actually looking at losing money by retaining cattle.
Something else that's been in the news lately is the Price Discovery and Transparency Act. They're looking to get that renewed. What can you tell us about how that's impacted the market and how could that look going forward for producers?
Yeah, so this whole idea about price discovery has been pretty much ongoing since 2020. It's been on producers' mind, but really got ignited again once the packing plants started shutting down in March, April of 2020. And this really fueled the conversation about really what price discovery is, which is the way that cattle are discovered. And what that is it's negotiated cash, which is including negotiated cash and negotiated grid. Combine all that, we get negotiated sales. And a lot of formulas or contracts or grid pricing is based upon a base price. And that base price is generally derived from negotiated sales. And there's just been conversation about, certain regions are potentially more represented in that negotiated price. So for example, if we look at Texas, Oklahoma, New Mexico region, about 10% to 12% of that region sells cattle on a negotiated basis. We compare that to Nebraska, and it's somewhere in the 30 to 35% range. And so really what this bill that will be introduced, again, into Congress, is to, among other things, to create regional minimums for negotiated sales that packers are obligated to purchase at. Now, how that gets set is going to be really interesting. Right now, they're saying that the minimum, if whatever that 18-month rolling window is, that's the minimum number of cattle that they have to sell. But other regions can't be more than 3 times as high as that. That's really important because given USDA's current regions, Colorado is not reporting a lot of the times, and they just don't sell a lot of cattle anymore. And so places like Texas, Oklahoma, New Mexico will probably already meet the minimum requirements if Colorado's included. That gives you just one example of how these policies or bills that are being proposed can have real impacts on the way cattle are discovered, in both now and into the future.
So we've got the cattle on feed report coming out on Friday, so that'll be out the day before this airs. What expectations do you have for that report?
Yeah, so one thing to keep in mind is that we have one less slaughter day this month than we did in the previous year. Mm-hmm. And so some of that harvest is going to be down a little bit, but it's probably largely a function of just one less day that's being reported to USDA. Placements are going to be up again. It's surprising that we can think that placements are going to be up again, but they are. So looking at those weight distributions across is going to be interesting. We know that Nebraska generally places heavier cattle. I would expect that trend to continue, and we'd probably see a lot of the lighter weight cattle start to fill up the Texas, Kansas feed yards. And then really what we're seeing is marketings are probably a little bit lower. Probably not significantly a lot, but it's definitely going to be lower. But like I said, it's largely because of one less marketing day. So those are some of the industry and analyst expectations that's compiled for about 10 or 11 analysts they survey, and that's kind of what people's expectations are going into this Friday.
And prices have been moving up on cattle over the last couple of weeks. What marketing or risk management advice would you have for our viewers?
Yeah, so as we know, the more volatile the market is, the more need there is for risk management. And so the government's LRP program is one program that people can consider, mm-hmm. recognizing that you can only insure cattle with a minimum of 3 months, which means if I'm sitting here in November, the earliest LRP contract that I can get is in February. And so if we're looking for that short-term protection, looking in for the CME futures and options, if we're wanting to directly protect price, recognizing we still have some basis risk there, or if we're just wanting to take all that cash risk out, just looking at the video auctions, Superior, Northern Livestock auctions are ways that producers can protect that price. And recognizing that price risk protection is, or really should be a discussion anytime we make a business decision. For example, if we're deciding to retain cattle, looking at some price risk management options is definitely warranted, especially when we're experiencing more volatile pricing.
Thanks again to Darrin and Elliott for their contribution to the show this week. Next week, we'll be joined by University of Missouri ag economist Scott Brown for a look at the markets. If you have a question you'd like for us to ask, you can get in touch with us via social media or email, and I'll be sure to pass that question along. Next up, as the old saying goes, if you want something done right, do it yourself. But if we're talking about applying manure, that might not necessarily be the case. A panel at the recent North American Manure Expo revealed that producers should really run the numbers to decide if it's more cost-effective to apply the manure themselves or to hire it out. Equipment costs, time, and labor should be put up against the cost of hiring a custom applicator before making your decision. You can learn more about the costs involved in do-it-yourself manure application in the November issue of Nebraska Farmer. And it's time once again for your weekly weather forecast with Nebraska Extension ag climatologist and Market Journal chief meteorologist Al Dutcher. Al, we saw a few warmer days this week. What can we expect in the days ahead as people begin to prepare for Thanksgiving travel?
Well, Bill, not overall a bad week. We did have that high wind event as we dealt through the midweek period, and that was in association with an upper air low moving across the extreme northern plains in southern Canada. Did bring some isolated blizzard conditions to portions of northeastern North Dakota, parts of the Prairie Province regions. But for us, what it really meant was just the high winds and a cool down in temperatures from very warm conditions in the 70s, and we've seen the drop into the 40s at post-frontal boundary currents. Now, as we go forward in time, right now, at least from the model standpoint, it looks like we should be fairly dry. Going through the holiday weekend, most of the activity is going to be on the east and the west coast. That being said, at this time of the year, models can change on a dime. So pay particular attention to the weather, especially if you're heading westward, because we do have a storm system that will be moving into the western United States that is likely to push its way through the southern portions of California, and a lot of vacation, a lot of travel comes through that region, so that may be a problem coming back from the holiday weekends if you are traveling by air. That being said, let's take a look at the upper air models and see how this week may play out, and we'll hope that the models are correct in terms of that regard. First thing we'll draw your attention to is that we have a trough to our north, just a weak troughing pattern over the northern plains, kind of a zonal flow here in the center part of the country. So we should see some fairly nice conditions as high pressure for the most part remains to our north and to our east. Most of the precipitation that does occur in the United States is going to be in the Intermountain regions from the Central Rockies northward. And then this trough will start to deepen as it passes east of Nebraska, bringing much colder air to the portions of the upper Great Lakes and the Ohio River Valley. Us high pressure builds in with a cold front, start to see a cool down in temperatures from the 50s into probably the 40s as we go into Monday with this very cool air coming straight southward. So eastern Nebraska is going to be at the forefront of this colder air. We'll see the warmer air return to western Nebraska as the high pressure ridge itself starts to build into our region. Most of the potential significant weather early in this period is going to be over the northeastern United States. We see that a trough tries to start building in the western United States, pushing out a little bit of energy, but because it's so diffuse, we're not going to get a lot of moisture return with the low pressure that's expected to develop over north central portions of Nebraska. Most of precipitation will remain in the Great Basin region. Then we see a piece of that energy split off. So we're not really looking at anything that's going to, once again, pull a lot of moisture up into our region, but it will bring slightly warmer air as we go into Wednesday before we get another trough moving through. So most of the major precipitation action will remain in the western Great Lakes. On Thursday, we start to see another trough rolling through. Once again, not a lot of chance for moisture to get up into our region before this trough passes, but as it passes, as we go into Friday, we're going to see it deepen. So right at the best, we're expecting a little bit of flurry activity to our northwest in the Dakotas. And then the system, once again, as it gets to our east, starts to strengthen and pull that cold air down. So we may see some of that cold air really firmly entrenched in eastern Nebraska, at least into the early part of next weekend. Looks like there may be a scattering of flurry activity, but our main attention turns out to the western United States, where that trough is expected to dig south and eastward as we go through the weekend and start emerging out into the central United States as we get into the first part of December. So the 8 to 14 day forecast, because that is expected to move in after we get to the 1st of December, the high pressure will be the dominant force. We're still going to be, even with these cooler temperatures, above normal. And in terms of precipitation, high pressure aloft, basically nothing in the way of significant moisture.
Thanks, Al. Finally today, with temperatures beginning to dip down, it's time again to make sure that your center pivot irrigation system is prepped for winter and next year's growing season. I was joined this week by Extension Educator Steve Melvin to discuss what you should be doing to winterize your pivot irrigation system.
Agricultural equipment is a large investment. As such, it's paramount to make sure that you're keeping your equipment up to snuff and in good working condition. With temperatures dropping, it's that time of year to begin thinking about winterizing that equipment. One item that may be most important are center pivot irrigation systems. Since these systems are stored outdoors, it's especially important to make sure that you properly winterize to avoid any headaches next spring, and there are a number of things you need to address.
Well, most important thing, first off, is just to make sure the water is drained out of everything. And even at this date, probably most of the state hasn't frozen hard enough to break something, a big pipe or whatever that might still have some water in it. So if you haven't went out and checked to make sure that everything's drained out, that's certainly the first thing to do. Also check the water, if there's any water in any of the gearboxes, and drain that out and refill them with oil. Another thing that's always kind of important to think about is a direction to park the pivot, for field work this winter or this next summer, spring when you get out there. Also, I always get asked about, okay, so which direction do I park it so the wind doesn't blow it over? And well, I've seen pivots get blown over, no matter which direction they're parked. But it seems to me over the years that maybe if they're parked to the southeast, they're a little less likely, but there's no guarantees on that. Also, cable theft is something to think about. If, some guys like to park them pointed towards the road because it's a little more obvious if somebody was out there, maybe with somebody driving by or whatever. So certainly that's a thing to consider. The irrigation engine, if it's a diesel engine or something out there, you want to make sure that it's ready for the winter. If you don't put coolant in the radiator in the summer, you sort of want to get that drained out. And it's always better if you can take them off and bring them and put them inside for the winter. So, several things to think about and do if you have a chance to get it done.
When going through your winterization process, Steve also recommends turning off any power in the field for any electrical units to mitigate any chance of unintended power-ups.
One thing that I always encourage guys to do, particularly with the electric pivots, is make sure you turn the power off out in the field. Having a pivot start up and pump water in January when it's 10 below zero is a bad situation. I've seen it happen. It ices up the out end of the pivot pretty quickly, and it'll usually tear down some of the towers and break things. So you've got a big repair bill on it. And you say, well, that could never happen. Well, sometimes weird things happen. The grandkids are playing with your smartphone. It's got the app to automatically start the pivot, or maybe there's some guys out driving around, maybe not looking for trouble, but ended up finding some and just happened to randomly start them. That's where I've seen it, is just people that are out, driving around too late at night and getting trouble starting a pivot or something. So always be sure and turn those off. Another thing I think with security this year, particularly with the prices, if there's some fertilizer left out there in a tank that you were fumigating with, or maybe there's some diesel in the tank out there, you may want to think about doing something to try to secure that, either bring it into the farmyard or put some locks on things or something.
It's also highly recommended to take the time to create a checklist for your irrigation winterization. This could help you to avoid making any errors or forgetting any critical aspects of the job.
But if you haven't done that yet, certainly consider making a list of the things that need to be repaired. It's unlike the tractor or the combine or something you can take into the dealership and they can start it up and run it in the wintertime to see what needs to be done on it. With a pivot, you can't really do that too easily. However, you can start a pivot on about any day it's over 40 degrees and check pressures and leaks and things. But, make that repair list where you forget all of those things. This next year, it looks like fuel's going to be higher priced. We may want to consider replacing a sprinkler package. Kind of the industry standard is about 10,000 hours or 10 years you should. And it's probably largely around the pressure regulators just get fatigued and start to fail. And so, it's a good idea to think about that, something you may want to put a little more emphasis on this year.
Steve also tells me if you happen to have cattle grazing crop residue near your center pivot irrigation system, it's a good idea to have some deterrents such as fencing in place to ensure that the cattle can't cause any damage to the pivot. If you'd like more information on winterizing your irrigation system, we've added a link to the Market Journal website. And that's going to do it for this week's show. If you happen to miss a story, be sure to download the Market Journal mobile app or follow us on social media to join in on the conversation. We'll hope to see you right back here next time. Till then, I'm Bill Dodd. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.